everybody, Kris, Sugatan here from Sugatan.io. You're about to essentially see a conversation between myself and Matas, our head of growth, and Maryna, our current head of operations. Really, we made a decision to start to reveal how we're approaching scaling profitably inside a down economy. And we're releasing what we hope to be a reference for e-commerce founders, e-commerce marketers, advertisers on Facebook, TikTok, that shows how we are developing our ROI positive scaling framework in this new landscape. Landscape is defined as coming into a bear market, not really understanding what the market behavior is or how it's going to impact e-commerce, the advent of TikTok as the new social media advertising platform, rise of CPMs, the cost of importing goods from China also impacting the back-end business numbers. And so there's just so many changes in the landscape right now that we feel like it's important to start to speak to our community on a frequent, consistent basis, that you guys can use this as a reference as we freely share with you guys what we're doing to really achieve ROI positive scale inside e-commerce, which is our number one mission. From the beginning, since day one, Sugatan's focus has been to turn $1 into $3. And my whole emphasis was to create a predictable machine that outputs profitable scale for e-commerce. And we're having to redraw the map, and every day is now day one. It's kind of like we're starting all over again. And so we're inviting you guys to start all over with us. And our strategic approach goes beyond just ad buying and creatives, although we do understand that that's the following Pareto's principle. That's the 90-10 after experimenting with influencer marketing, Pinterest advertising, Snapchat advertising, YouTube advertising, Google. We really do see that the catalyst of profitable scale is the perfect marriage between ad buying and creatives. But there are other factors that we've recognized is critical to aiding media buying and creatives. And so we've really divided those elements into 5 pillars. And the first pillar is measuring buying intent. That defines the investment timing, is what we call it, which is really your ad spend, i.e. do you push your ad spend or do you hold based on timing patterns. Number 2, adapting innovation to quality of traffic and quality of attention. Number 3, viral ads. Number 4, the operational framework that ties all of those things together cohesively and efficiently in order to ensure quality strategic execution. And then number 5, business design. What you as the founder, how you structure your business levers in the form of COGS, SG&A, EBIT, and your marketing spend in terms of percentages, not numerical values. And that's really what we're going to go into. I'm going to say that we don't have a formal academic background in business. This is our real world experience that, as scrappy, curious, challenge driven group of people that we've put together inside Sugatan, have essentially figured out and solved for and experiment and do day in, day out as a 100% a remote international team. And so we're bringing you in to our world to, once again, we're known for delivering extraordinary value 2 years ago, and because of the time that we're in right now, we're doing it again. So enjoy. Hopefully you guys get a lot of value out of this, and moving on to the conversation. A good friend of mine who was a former CMO of a startup, co-founder of another tech startup now, you know, he got a very scary email that was from a mentor of his who had raised hundreds of millions of dollars from VCs and has successfully scaled their own businesses. And he was like, brace yourself. There's no more money that is going to be sent by VCs. There's no more raising, you know, and you have to prepare yourself for the next 3 years. Yeah. It was a pretty scary email, actually. And he was like, to be honest with you, I'm pretty terrified for his security and for his business and all of that. And, you know, I asked him, I was like, okay, so what do you think is going to make it through during this down period? And he was like, you know, running a business profitably. And when I thought about that, I was like, that's what we've always done for the last 4 years. We've always scaled e-commerce businesses profitably, which is actually, I think back then I didn't really understand the normal landscape of the business world. I just thought that if you were to have a business, you should scale profitably. But then I learned over time that we're doing two different things that are at the same time, and each one of them independently are already difficult enough. And I don't really think that we have spoken about this so transparently and emphasized that we do those two things simultaneously, which is both scaling and scaling profitably. And so I think now is the time for us to share how we're doing it, especially in a pretty bear market is what we're calling it. Now, it's not going to be easy because of the fact that we're in a new landscape from a social media marketing perspective, with the advent of TikTok and Facebook making a lot of changes in their algorithm, Apple's iOS release, all of these things. So it's a new landscape for us, but it doesn't change what we've always done. We've always been focused on ROI positive scaling, leveraging social media and ad tech innovations, essentially, as a primary ways to achieve e-commerce scale. Let's go into number one.
Okay.
You know, buying intent defines timing of investment. Do we push or do we hold? Let's just elaborate on that first. What does that mean?
Well, the way I see it, that's always it's going to be two main time frames. It's either people have their wallets wide open or they have them closed, right? And that's how I see buying intent, right? How willing they are to buy anything at this certain moment, right? And then the whole philosophy here is that we try to analyze and understand how the buying intent moves as a chart from top to bottom as good as we can, and then we adapt our investment proportions or ad spend to match this buying intent chart that's moving, right? So the goal always is when, for example, the buying intent is going down, is to hold your investments, right? Because you don't want to lose, you don't want to increase risks of damaging your ROAS that you're getting on a daily window, right? And vice versa, when the intent is moving up, you want to make sure that you start pushing your investment, your ad spend ahead of time, right? So you wouldn't find yourself in a place where you're reacting to the present, right? Because the fact itself that you're reacting to the present already means one of the two things, right? You're either already losing ROAS in the present, or you're not able to scale high enough, right? So our methodology is just designed to predict the future, you know, a little bit from the buying intent perspective, and that's one of the I would say one of the biggest secrets behind scaling overall, right? Because timing is everything from investment side, you know.
Yeah, this is actually, I think, when we've worked with so many different founders that we've taken and they've entrusted 500,000 in monthly ad spend, 1 million in monthly ad spend. I don't think that we've done a good enough job of explaining to them that it's not really realistic to expect that we're going to hit the same ROAS every single day, you know? And even then, that the market's buying intent does shift in terms of it having a seasonality. And I think there's small nuances that when you're ad buying, as an ad buyer, you notice patterns. It's so fascinating because one of the patterns that we had noticed is that when it's payday, just a small thing that is not an assumption, this is the real world signaling.
It's people psychology is that majority of the overall consumers, they celebrate the fact that they get the money, right? And psychologically they want to celebrate the fact that, oh, I got a paycheck, and that's just a better timing to sell them anything you want, because they're more, again, their wallet is more open at
their
that
wallet
particular
is more open
moment.
And this was, you know, during a non-down economy, we're seeing that when people did get their paychecks across many accounts, the revenue would lift.
Yep.
You know, and so that's what we mean by, really for us, it's honing in on really trying to understand the patterns and the buying intent in this new landscape, and then helping us to make decisions on when to push ad spend or when to hold ad spend. And I think that that's something that many founders and ad buyers, head of growths, should be extremely cognizant of, is whether you're ad buying or somebody else is ad buying on your behalf, you have to ask them the questions like, what are you seeing as the patterns? Don't be one of those founders that basically hoard your ad buyer and say, give me this total ROAS every single day, you know, and listen to them when they say, actually, there's these patterns and we have to go with these patterns because that's a smart way. And you have you're ad buying proactively, or this ad buyer is ad buying proactively rather than reactively.
And I think it's extremely important to specify that this, and we've come across founders like who want stable daily revenues or stable daily ROAS. But what is extremely important to specify is that like this type of mindset actually reduces your MER at the end of the day, right? Because you'll never ever, even, let's give a simple basic example of 7 days window, Monday to Sunday, right? And let's stick to, let's make it simple, right? Monday, Tuesday, on average, the buying intent is always going to be lower, right? And from Wednesday, it's going to start climbing to reach its peak on Friday to Sunday, somewhere there, right? Now, in example A, if we would try to hit the same revenues with the same ROAS every single day, we would put ourselves at big risk to lose the ROAS in Monday, Tuesday. So even if we maintain the daily average revenue, we already lost in the ROAS, right? Now, Wednesday, Thursday starts, the buying intent starts climbing up, right? But at that particular moment, we can't start scaling because first, we need to earn back what we lost in Monday, Tuesday, right? Mm-hmm. And then automatically, so that would be example A. Example B would be, Monday, Tuesday, we're okay going 2 times down on daily revenues, but we managed to protect the daily ROAS that we need, right? And when Wednesday, Thursday, Friday comes, we don't, while our competitor is still like trying to earn back the money that he lost or she lost, right? We're already able to scale, right? And in 7 days window, that's how we outscale others. It's simple as that. Even, if you and I were competitors, we have the same ads, the same offer, I mean, everything is the same. I would just outscale you simply by managing budgets better.
Yeah,
And
exactly.
the outscale size, you know, in some case can be tremendously like high, you know.
Yeah.
And I think it's worth telling a little story, you know, how we get here, how we started, you know, thinking about all of these things, and you know, it's as always, it starts with just us being curious about something, you know. So, long time ago, I was always curious about about the timing, you know, because I always felt that, you know, it's the if you can master the timing and if you can know ahead of time when to, you know, triple or x5 or extend your investment or when to cut the investment, then you will have such a big power, and that somehow always energized me or motivated me, right? So everything started with as basic as just, you know, I've had and we've had accesses to many Shopify stores, right? Because, you know, we do a lot of vetting, we do a lot of analysis of multiple businesses, right? And what would I do myself for a long time? I think it took me like maybe around 2 years. I mean, in the beginning, I didn't even realize that I can get here. It was kind of just a test, probably, you know, from curiosity. But what I would do is I just write down each month's revenue, like of, you know, if Shopify is 3 years old, I would write down all of the 3 years, month by month, the actual revenues, right? But then I would never ever care about the dollar value. What would interest me is the percentage transition from month to month, right? So I started collecting like a lot of data. And then somehow weirdly I started seeing that there are patterns, like, right? That dollar values are different, but percentages are very similar, even in different industries, in different countries, different products.
Yeah.
And then, you know, it's in the beginning, I mean, I couldn't understand it, but it was something that, again, was very
Interesting,
interesting
right? Because
itself.
you're like, wait a minute.
Yeah, like why does this happen? You know, like you keep asking these whys to yourself, and then this is how, again, like I think for me personally, this is how my innovation is happening always. I'm curious about something, then I find something that I don't understand, and I just keep asking why, you know, and I just try to dig deeper.
Yeah.
So that was the same with market intent or buying intent, right? When I managed to understand the averages of how the revenue level should move from month to month, I was like, okay, you know, what now? And then you know, my next stage was just trying to apply that to real life, to practice.
Yeah.
And I started setting my projections, like for myself in the beginning, to match those percentages, right?
The percentage patterns that
Yeah.
you were seeing, analyzing multiple businesses' revenues
Yeah, correct.
over a period of 3 years.
Yeah, and it was simple as that, and I think it has shifted our, as ad buyers, I think, you know, me as an ad buyer and other ad buyers that I work with, it helped to shift our mindset to a higher level where the philosophy is simple. Let's say we're in present month and I see from my data that next month, you know, we should go 20% up or 25% up as an example, right? That's gonna be always my target, you know, matching the average market intent.
Yeah.
And then, you know, we start working backwards. We start, you know, calculating and analyzing what's doable, what's realistic, right?
Yeah.
And usually in many cases, there's gonna be a gap between what the market, what the buying intent average is telling you and what you see that you realistically can do, right? And then this is where we say to ourselves, you know, fuck it, you know, let's just figure out how to fill the gap and how to
Yeah.
match the buying intent. And in many cases, you know, our chances of succeeding like increases by a lot, because like there is some sort of power there in this buying intent and in those percentages, like, and there is some reason behind it why those numbers keep repeating, you know.
Yeah.
So then it's probably just easier to set the right goal that is, you know, that is ambitious in some cases, right?
Yeah.
And then push yourself to actually deliver it, right?
What's really interesting as you're speaking and what I'm realizing is that experientially it's been pretty painful to try to get a lot of founders and marketers buy-in when we try to explain to them that we can only predict based on data patterns and benchmarks that we're seeing all across the board, that most likely we can only increase or we can only hit these revenues by end of month or within the next 2 months based on this analysis that we've seen. Because we, inside Sugatan, there is a lot of emphasis under risk reward. We take very seriously the value of the dollar and where that dollar is going. We've done that since day one. And so for us, we really try to measure the risk when we do this ad spend. But from a founder's perspective, you know, when I speak to founders and myself as one, we're such eternal optimists and we want to like push. And so it's hard for us to like accept that that is the limitation of revenue. And so that's kind of like what I think founders and marketers have to grapple with during this new time that we're going into, or this new economic landscape, is I think you do have to be a lot more risk adverse, you know, and be cognizant of that. And so this is the time to really, if you have access to that data or a network of founders, maybe just compare notes and just be like, what were the percentage increase in dips? I mean, I don't know if anybody's going to actually do that, but that's the kind of information that we do have. And yeah.
But now, like in the present moment, that's the old version of how we are looking at buying intent, because again, the times, the upcoming 2 years, you know, of course, they're very scary, but they're very interesting at the same time. I think we like challenges. All of us, you know, we're also energized by getting, like, solving for those challenges, right?
Yeah.
So, like in the last, I don't know, 2-3 months maybe, you know, I just started getting this feeling, you know, that it's not enough, you know, and that it can be better, it can be, you know, higher level, right? That it's really not it, because after a while it started seeming too simple to me, and also I was not able to find arguments for myself. For example, why in some particular months my actual results are like super off from what the average buying intent data is telling me. And I was like, shit, you know, maybe it's not working. Like, what's the reason that, you know, sometimes it feels that it's so super accurate, but sometimes it's just completely off, you know. So right now we are developing deeper methods on how to predict the timing on a like way more advanced level, right? And you know, I think it all starts with reading the economy signals, you know, and economic indexes, right? Because what we've realized is that a lot of the Fed's indexes, like for example CPI, Customer Price Index, directly affects the way markets are reacting in different time frames, right? So I'll stick to the CPI index because it's a simplified version example, right? But basically CPI index is just like a most popular form of reporting inflation on a monthly basis, right? So each month, Federal Reserve around like 10th or 11th day of the month releases the actual percentage, right? And it seems so simple, but it is proven by reality that all of the markets, like SP 500, Nasdaq, crypto, almost all of the investment um, units are like waiting for what the announcement will be, and after the announcement they make their decision whether they go up or down, whether they long or short. And when I started realizing that, I started again, like, I'm a true believer that like all life is like cycles and patterns, and you can find those patterns almost everywhere, right? So I started seeing this pattern, this cycle, like super, super clearly, that for example, in this case, Federal Reserve affects the markets affects the media affects the overall people buying mood, whether they're scary, whether they're like, fuck yeah, let's spend money, or something like that.
Yeah, it's not about buying mood, but it definitely has, the media has a major impact on people's behaviors.
Yeah, and what we're trying to, it's still work in progress, because it's a huge project that we're determined to, like a new methodology that we're determined to build to ourselves and the goal is the same, how we can predict this timing on like the most advanced level possible, right? And CPI is just like one tiny thing that can already kind of helps us to understand very closely how upcoming month is going to react compared to the average that we have. So as a simplified example of how we start to use those Fed indexes in practical life is that, for example, CPI is like very, very low basic index that sets the tone for the upcoming month's market's reaction, right? And that technically also like controls the financial narrative for upcoming month, right? But that's just the start. That's like work in progress for us, because we're like super determined to build something just, I think, outstanding maybe is the right word, right? Because
it's more than outstanding. It's not outstanding, to be more specific. We want to build something that tries to reduce the risk as much as possible. It always comes down to that. And one of those ways is posing the question, can we correlate buying intent with something as the index could, it's free information, it's accessible. Is there a correlation? That's our first thesis, that we want to explore. It's a big assumption, but it's a bold assumption, I think. But at the same time, we have to investigate whether there is a correlation there, because previous to that, we're seeing some patterns that you would think a beauty product versus a men's product, they still have the same correlation in terms of revenue increasing or decreasing month over month. And that's actually what was the most fascinating for me when I started and I was ad buying myself. And I still am just like, is it the algorithm or is it really the market's buying intent? I think it's a marriage of both. Ultimately, you can't really isolate between one or the other, but this is what's the most interesting part of the journey, is to continue asking these questions that are not really they're at first theory, but then testing it against the real world.
Yeah, I mean, it's as I said before, it always starts with us just being extremely curious about something, about everything. And then, asking these difficult questions that we don't have answers to and no one has answers to. And then we're like, okay, so how can we try to figure this out,
Exactly.
And what can we build different or unique out of it, Because I think we're just now in the same place as we were when we, for the first time, like 2 years ago or whatever, started thinking about this market intent or how these percentages moves, you know. And yes, it's a bold statement, but me personally, I'm just overly confident probably in this whole thing.
I mean, it takes that to figure out how to answer these difficult questions.
Yeah, because again, like I just know, you know, from experience already and like multiple things, that whenever you start seeing weird patterns that, you know, that you can't explain, there's something behind it always, you know. And again, you know, economy and Federal Reserves and government central banks, they will always be able to control the current day's economy, right? And that will always affect media, and media will always affect the, you know, fear or greed that people have in buying intent, right? Because even when we think about you know, upcoming Q4 this year, right? That's also going to be a very interesting and unique experience, because again, like we in the whole history of e-commerce, we never ever had bear markets, right? So there's absolutely no data points, no accessible information, like absolutely nothing to take and you know, prepare ourselves from that, right? So my philosophy, you know, is that okay, you know, let's just use what we can use, and let's try to connect the dots and see the logic behind it, right? So why for example, I also, you know, predict that this Q4 is going to be like very different from the last 6 years is again, it's a sequence of dots that I connect, and I just try to look at it from a holistic logical perspective, right? So quantitative tightening, right? Fed started doing that in May 11th last month, right? That's basically just a policy to reduce the liquidity in markets, but overall goal that you know, central banks and Federal Reserves has is that, you know, they just need to start reducing the buying power and take the money back from the accumulation, because we just have a incredible big amount of money in this circulation. That's why the inflation is, you know, spiking. So quantitative tightening is always the beginning of, you know, recession or stagflation historically, right? Way before the e-commerce was even founded, right? But if you think, because it's already a public information, that the inflation is going to keep increasing throughout this year over you know, a period of increases like for 100%, right? It can have a dips in its, you know, way, but the, you know, annual trajectory is still going to keep increasing, right? So that's a public statement already. That's a fact, right? So if we think that, okay, quantitative tightening is happening, they're taking money out, they're increasing the inflation, and they're also increasing interest rates at the same time, right? Q4 comes, winter season comes, right? If gas and oil situations will not be solved, like worldwide, before the winter season comes, majority of consumers can find themselves in a place where interest rates are historically high already. Inflation is historically high. The oil and gas historically high, right? And the fear and scarcity in that moment can also be historically high, right? That we didn't have in the last 10 years, for example, right? So if everything is historically high and everything negative is historically high, then it just isn't this just a simple pure logic to assume that the buying power will also go down strong on Q4 compared to all of the previous years?
We'll see, because we're talking about humans, and humans operate in the gray.
Even if, like, I think where we position ourselves and our mindset is still at a place where, look, if the e-commerce revenue is like 5 trillion or whatever, even if it's gonna dip by 40-30%, you know, there's still so much money out there that's gonna be spent, right? So I guess I'm just coming from this perspective as something that I think we need to be aware of and just prepare ourselves ahead of time, because it's still going to be all about how you will outbid or compete your competitor, and I'm sure that we'll still be able to scale and grow, because the total revenues that will be generated are still going to be enormously huge, you know.
Yeah,
It's just a bigger risk and more complicated period for small businesses that don't have cash flow, that, let's say, don't have funding or don't have the right partner with the right experience to guide them through these times, right?
Yeah, I agree with you. But now let's talk about our second pillar, that we inside Sugatan feel like it's it's a critical element to scaling ROI positive. And that's adapting innovation to quality of traffic and quality of attention. Okay, so what the heck does that mean? Let's go into quality of traffic, because that goes back down to costs.
Yeah.
And our theme here is to be risk adverse. And part of being risk adverse is understanding what it's going to cost you, and then what the predicted return is on that. And so first we have to measure quality of traffic versus the cost on the platforms like Facebook and now TikTok. Let me just address, I think, a basic conclusion that I think that we know, but I think many other people may not know, which is that pre-iOS release, we saw CPMs going up, and we knew CPMs were going to go up no matter what. But once we all heard about the iOS being released, we also assumed that quality of the traffic was going to go down, because Facebook couldn't actually track effectively. And so what we were facing was CPMs going up and quality of traffic going down. But our conclusion now, after media buying millions after iOS release, is that CPMs have certainly gone up, but the quality of traffic is the same.
100%.
I think that it dipped only during August when they were recalibrating, but I noticed after that Facebook's algorithm really just recalibrated effectively afterwards.
Yeah, I mean, we're still scaling accounts. We're still scaling Facebook spend, so that's good enough conclusion. But it's it's always about whenever we scale businesses, I always see like two main ways to take, two main paths to take how to scale, right?
Okay, yeah.
From like more technical side, right? And I think it's incredibly important first is to understand, that you need to try both of them, and just to see which one is going to work.
Try both of the paths.
Yeah, and to understand which one is going to work better for you. So the paths are, it's either going to be quality over quantity, means that you're attracting expensive traffic that also converts on a high conversion rate, right? Or vice versa, cheap traffic that converts on low conversion rate, right? Now, many people think that that it's not important, or maybe you should do both, but from my personal experience, I can again confidently say that at the end of everything, it's still going to be a ratio of different metrics that you need to match, right? So, for example, if we take the highest tier of metrics, it would be your AOV, your conversion rate, your CPC, right? Now, AOV is going to be always the most stable metric. It's not fluctuating like from 100 to 200 for no fucking reason, right? Now, AOV is also that metric that you don't really have a way to manipulate that much outside of zero, of course, initiatives, but even that,
That's
usually
a slow
yeah,
burn.
and it doesn't like
yeah.
increase your AV by
Yeah,
2 times or
exactly.
3 times, right? So what you can do, what you can control, and what you can manipulate is the costs, let's say CPC and the conversion rate, right? So the goal is always going to be the ratio between those two main metrics, right? But what's important to understand is that and you can make it work both ways, yes, but I'm coming from which path is more scalable and faster scalable, and this is where it's very interesting because we have accounts that go from like cheap cost, low quality perspective, and for those accounts it's the right way to scale, because when we try to shift vice versa it just stops. We also have accounts that only scales when we go through like high cost, high quality of the traffic way.
You have to try both to see what's right for your business.
Yeah.
You have low quality, low AOV, low conversion rate, and then you have high quality, high cost, high conversion rate. And both of those are levers that you have to test to see which one. Now let's go into TikTok as a source of traffic. It's conclusive inside Sugatan that TikTok is an effective top of funnel acquisition channel that is absolutely scalable. However, we have to wait for TikTok's algorithm to mature. Historically, Facebook's, I think, CPM, when their algorithm matured enough to be very scalable because the cost of traffic going into the website was cheap enough to drive a profitable acquisition, that CPM was around, I would say, $9 to $13, maybe even $8, $8 to $13 CPM. And us as those who are around for the next year, I think that's the exciting part to anticipate, is when that happens on TikTok. And we're going to be there when it happens, and it's going to be really exciting when it does.
Yeah, because it's gonna be that nuclear bomb scaling mode at that exact moment where it's gonna be like the sweetest perfect balance between the quality and the cost, right?
We'll
we had in TikTok, in Facebook previously. That's where drop shipping was easy, everything was easy. So I think sooner or later the same time will come for TikTok too. So that's one of the things that we're tracking, looking at it closely, and kind of waiting for that. While in the meantime, just adapting to our current state with TikTok and still scaling and making it work. But we know that it's only gonna get better when the algorithm is gonna mature enough.
Yeah, but the right balance right now is you still have to scale with Facebook and bring in TikTok as a complementary channel, warm up the ad account inside TikTok, really understand the platform so that when that time does come, you're ready. But again, we'll see. You never know. TikTok and Facebook are two different companies. So that's our hope. Our hope is that TikTok gets there. Let's go into the quality of attention.
So another extremely important thing that we do is we constantly try to analyze where the people's attention is going inside different placements or different platforms, in TikTok's case. And it's all about, I think the principle or the strategy or the logic here is like super simple, right? You just want to show yourself in places where everyone spends most of the time, right? Because you get better chances of making them click on your ad. And I think the best proof of that is actually last year, last summer, when I think we were honestly probably one of the first ones who realized at that moment, that Reels started booming, right? And I was like, all of us, we were like ourselves, wait, shit, like out of nowhere now I'm spending all of my time in reels and like not in stories, not in feed, and that simply just suggested the ideas of like, okay, what can we do about it, right? And previous to that, from ad buying perspective, there's always this myth, oh, only auto placements works. Like, what's the point in testing placements or stuff like that? So we went against the myth, the stereotype, or the general belief, and we managed to build a specific strategies for Reels only campaigns, right? And in that particular, I think in first 3 months it was like a holy grail, because the CPMs were like so cheap, because there was literally no competition there. Because if you would run auto placements, the Facebook wouldn't spend on Reels automatically, right? You needed to run Reel specific campaigns, to make it spend on Reels, right? So the CPMs were like enormously cheap because no one was doing that, but the attention was extremely high there, because I remember like having historically low CPMs while at the same time having highest, like on account level, highest CTRs, right? So you imagine
Can
that.
you give an example? Average CPM, average link CTR, just to
Uh,
be specific.
I don't now remember numbers very, very closely, but if, I'll just take one account in mind. Like our average CPM account level was like 35 to 40, right? So Reels, I was having like 10, or 10, 15.
Yep, exactly.
And CTR account level was 1 to 1.2%, 1.25. And in the beginning, Reels were like giving me 1.5.
Yeah.
So at the same time, we got way higher CTR, way lower CPMs. Our CPCs were extremely cheap. Yes, the quality was a little bit lower, but that was still just to give you an understanding of how high and fast it went, right? The account was 3-4 years old. The lifetime spend was around 20 mil, right? And this Reel campaign that we've built in like literally first few months, it became the #1 campaign sorted by spend on a lifetime period in account that spent over 20 million. And all of this in 2 months. I remember I was at buying that account myself. I remember like being crazy about the fact that after first week I managed to shift like 80% of the budget towards completely
placement.
new thing. like never ever before I had something like an experience where you test something and just every single day you're like tripling the budgets of.
But see, that's the beauty when you find the quality of traffic and the quality of attention, which is based on CPM and high link CTR.
Yeah, and it was amazing for a while, but then we started talking about it, and then everyone started coming into Reels,
and then the CPMs on Reels started to just
going up.
Yeah, and then the CPM on Reels started to go up.
Yeah, because the competition started catching up.
Yeah.
And at some point, it wasn't that cheap anymore.
Yeah.
But that's just an example of why it is important. Of course, it's not something that every single month you'll come up with some groundbreaking new strategy.
Yeah.
But from time to time, you can really take advantage of these periods where like it's all you need to figure out is where people are spending their time, and if you'll find a place where like that no one is still aware of, or no one is like trying to bid against you in those places, then yeah, that's it. You scale like right there. So it's just about being proactive constantly, and like the innovation itself is a never-ending like lifestyle.
Yeah.
The most important thing, right, beyond the hack or beyond the strategy, right, is that you need to innovate yourself in your own unique account with your own unique data and your own unique patterns. Because whatever works for me, yeah, some things will work for you too, if they're really, really big things. Some of them just won't. And I mean, we have a bunch of like strategic like levers or whatever that we're pulling, and even within our own accounts, one account works, another account doesn't work, and that's completely normal, So the hack, the strategy is the mindset. Like I always try to emphasize this, that everything starts here, and then and if you crack here, then everything else will follow, you know, like the innovation itself. Like it's just, you just, if you want to be in a place where you just want to follow others, right, and use already like existing things that are probably already squeezed out by others, right, you'll always stay 3 steps behind. Like there's literally no way for you to even be on the same line, you know.
Yeah. And so really, in summary, if you're a founder or you're managing ad buyers and you can just, and you don't know how to ad buy yourself, it's really important that you at least understand and try to gauge how much they're really innovating and trying new things, because that is what it's going to take to scale in this new landscape. And if you have an ad buyer that, or you yourself as an ad buyer, you know, you're just waiting for a creative to go viral, for example, and that's the response that you're getting from your ad buyer, that is the wrong approach, because it has to be a perfect marriage between your ad buying methodologies and innovation and your creative innovation simultaneously. I really do want to go into attribution innovation, because I think that, you know, we met Matas and Davidas from Wari during our time here in Vilnius, and as I talked to them, you know, it's becoming more, I think, common knowledge that accurate attribution is a pretty impossible task, or at least it's a long black hole. And so how we've innovated in still tracking the impact of our initiatives without actually getting stuck on the actual value of that initiative, we've gone to correlation in terms of percentages, as long as you have a stable data environment. And so task number one, I think there's still a lot of people that don't, I think everybody has sort of like makeshifted their own solutions, whether it's Google Analytics or Hyros, or what was the other one that Maine Lobster was using?
Wicked Reports, Triple Whale, there's a bunch of them.
As long as you have managed to create a stable data environment where you're seeing the, like, it's a reliable data stream that you can then measure the impact of your initiatives from. That's all that matters.
It's really like, you know, like Facebook, for example, by default will give you two things at the same time. It's over-reporting and under-reporting. So like all of those softwares, what they just help you with is to solve for, like instead of having two issues at the same time, you have one issue, which is only under-reporting. And that's fine, because like the goal is, there's just one goal, like figure out your ratio between whatever ROAS you see like in whatever the channel, and what is your total ROAS. Like present total ROAS, where you take your total revenue divided by total marketing spend. That's literally it.
Yeah.
Like we just stopped looking at number as a number value. The only number value that we care about is the total ROAS or MER. That's it. Everything else is just, we started looking at those things as ratios. I'll give a very like basic example of account, like just to show you how this ratio works in real life. So for example, we had this account with $150 AOV, right? Our Hyros last click ROAS KPI for Facebook was 1.5, right? AOV was the stable metric that you can't manipulate that much, and it was really stable around 150, right? So in that case, my ratio KPI between CPC and conversion rate was 1:1.
Okay.
And whenever I would maintain the same ratio, I would get the ROAS. So it doesn't.
You would get the
target ROAS.
Target ROAS, yeah.
And it doesn't mean if you know, my CPC can be $1 and my conversion rate can be 1%. My CPC can be $5 and conversion rate 5%. I would always get the ROAS, right? So that's when we stopped saying that, oh, this is good CPC or this is bad CPC, or this is good conversion rate or this is bad conversion rate, because it doesn't matter. What matters is ROAS. ratio, right? And that overlaps with what we've been saying earlier, that it's either quality over quantity or vice versa, right? So that's it. That's that simple solution. We just stopped looking at the number values and we started looking at ratios, and like we don't even care about attribution loss, because so what? Like
Yeah.
like that literally causes absolutely zero issues at the moment already.
Yeah,
We
exactly.
just adapted ourselves, to the new way of how you read data, and that's it. We could quickly touch on the cross-channel budget distribution, right? Which is another. I think it was the hottest topic in the last Q4, at least I think, right? Where everyone started realizing that shit, we can't be so dependent on Facebook, because Facebook, costs go up, maybe for some businesses that are not optimized well on the back end and they need a high total ROAS KPI, they started getting out of the business, because still at some point, if your cost goes too high but your quality does not follow in some sort of ratio, whatever ratio you need, you're going out of business because your numbers don't make sense, you can't get the ROAS, right? So I think many of the small, medium, let's say under 1 mil monthly revenue e-com businesses were like mainly stuck in like a budget proportion where like 95% of the total marketing spend was towards Facebook and like another 5 to 10% Google. Like that was the standard, without like thinking, individual cases where you get all of the smaller channels that don't really make that big of a difference, right? So all of us we're all aware that that's risk, and we need to diversify to reduce the risks. So what we have managed to achieve, and we see that it's kind of already a sweet spot that makes sense, and the current time is where Facebook from 90 to 95% goes down to 60%, right?
Of your total marketing spend?
Yeah. TikTok takes another 20 to 30%, and Google takes 10 to 20%, right? So in this kind of balance, you reduce the risks and you reduce your dependability on Facebook, right? So if some shit happens with Facebook, that's now only 60%, not 95%, right? At the same time, you unlock new channel, new audiences, new acquisitions, you scale, right? And yeah, you reduce the risks and you scale at the same time, because even if Facebook has like a number value spend remained the same, it just shifted from 95 or 90% down to 60%, like you basically like manage to scale by another 30 or 40% by just activating TikTok and maybe doing more work on Google, right?
Yeah.
So even if Facebook is going to shit, you literally don't need to do anything there. Just maintain what you have, and you can like still grow while at the same time reducing risks, while at the same time maintaining whatever EBITDA you need. And that's it. It's simple.
Pillar number 3 for ROI positive scaling is going to be viral advertising. And let's go to the basics.
Our definition of viral, and the primary, of course, metric that we look at, is generated revenue, right? Because if it goes viral, it means it's working. It means we generate a ton of revenue, right? That's the main metric, right? On top of that, of course, the definition of viral ad is an extremely high amount of engagement, right? And engagement in a way where it's a very healthy combination between like all of the likes and emotions, comments and shares in particular, right? And it's the third definition is from media buying perspective, the enormously fast, enormously high ability to scale at a very fast rate. So like scaling in a way where you use this one ad and you can literally build campaigns with this one ad, and you can keep duplicating campaigns. You can increase the budget every single day, like double, triple the budget, and it still keeps going. Whenever ad buyers get viral ads, the ad buying becomes super easy. Like literally a 9-year-old could scale an account if you really have a good viral ad, right? That's why we have so many ad buyers that pretend that they actually delivered something when all they did is used creators made the viral ad and then they were there to push it, but that's not their result, I would say, right? Because it's just too easy, right? So to summarize, it's revenue, of course, engagement, and fast scalability, where you can literally, like, day after day, you can triple, you can X5 the budgets, you can push this ad however you want it at that point. It doesn't matter what your setup is, what your audience is, nothing matters, because it's just working, because it's going viral, because Facebook in that particular, like, let's just, summarize like why it is so fast scalable, right? It's because Facebook as a platform favors you as a creator for putting out the content there that makes people spend more time in the platform, because that's what Facebook cares about. That's the main thing, right? They want people to spend more time in their platform. If your ad has a very high engage rate, Facebook, the way algorithm sees your ad is that, oh shit, this creative, this content will make people stay longer in our app. That's why we're gonna favor this ad by giving cheaper CPMs, which is in the correlation with high engagement. That's why we're gonna prioritize this ad in the auction, in the bidding. That's why we'll make sure that this ad works for the advertiser, right? So that's in a way just Facebook gives back to you for you delivering your parts, right? For creating the right content.
Well, let's be more specific on revenue.
Yeah, so pre-iOS period, right, we were always defining viral ad as a single ad or single ad ID, right? So single ad that generates 1 to 3 million in revenue over a period of time, right? That was our definition of viral ad. Now, post-iOS, we still managed to generate ads as single ads or single ad IDs that still generate at least million or a little bit higher than million, but we're already seeing a trend that the revenue benchmark for a viral ad might be shifting, towards a lower number, right?
Yeah.
So we know that it most likely will continue to change, right? So our current definition is that 1 million generated revenue per single ad is still a viral ad, right? But what we see coming up is that instead of thinking about one ad as a single ad ID that generates like this 1 million or 3 millions, we will think about a group of similar ads under the same epic that will generate the same amount of revenue. And it's related to the technical side of things, right? That we're seeing a trend that it's becoming harder to even on Facebook, the shelf life of viral ad is shrinking, right? So that's basically the main thing that's coming from the technical side. And so instead of treating one ad ID as viral ad, we can treat epic as viral epic. And let's say we'll have 5 very similar ads under that epic that will generate the same amount of money, right? So in the end, we still get what we want. We still deliver the same numbers. It's just that we're adapting our the way we do things. We're adapting to how environment is changing. Yeah.
Yeah, and to go into the granularity, because when we talk to founders and marketers and even some agency owners, the biggest problem is creatives. Their biggest problem is putting together a team of creatives, how to manage that team alongside the ad buyers. What KPIs do you give the creative team? Because by nature, creative strategists have a different brain than ad buyers do. And how do you get both teams to work effectively together? That's one dimension. The second dimension, and the most important one, is that both teams are working so that they're delivering the results and the performance. And so to go into what an epic means, and you just brought up, I think, one of the most important points only because of the fact that many e-commerce marketers and advertisers need a lot of guidance around creatives. And the point that you just made is that historically, one ad that is usually the output of creating multiple variations from one single story, that one ad has gone viral, generates 1 to 3 million in revenue in its lifetime. That's normal for us. Inside Sugatan, that is what is expected from the team to produce $1 million ad. That is the definition of viral. But now we are shifting so that it's not one ad, it is one epic. And the way that our creative categorization works inside Sugatan is we have a theme that then waterfalls into an epic, that then waterfalls into a story, and that waterfalls into variations. So to give you an example, let's say that you're selling a supplement for digestive health, and the theme can be bloating. That's the theme. Under bloating, the creative team will produce epics. And so the epics can be, again, the emphasis is in the overarching angle, the main messaging. So then one epic could be skinny girl that is showing her bloating, and it's literally the first frame is just showing a skinny girl that's showing bloating. Immediately, that is a thumb stopper, 100%, because it's ironic. And it's also a pain point that is relatable across all women. Then the second epic could be talking about how painful bloating is for women. And then under those epics are the stories where you can choose humor versus pain point versus UGC testimonial, for example. And what we're saying is that now we're shifting to expect that per epic can generate $1 million in revenue. There's something that I really, really want to even go into defining what makes an ad viral, right? Because I think that normal marketing theory and practices and real world application before e-commerce, the method was to market to, first of all, understand who you're marketing to, i.e. demographics, generation, millennials versus Gen Zs versus Gen X, baby boomers. Like, that was kind of like the first step that you're taught. But the definition of viral inside social media, it transcends demographics and generations because it is a very relatable pain point across all demos.
Broad.
And that is a very, I think, I don't know if controversial is the right word, but it's novel. It's a mindfuck for, I think, a lot of longtime marketers or traditional CMOs who have scaled or managed budgets for Procter & Gamble subsidiaries, that's a little bit of a mindfuck because you're taught to segment, and I think that at some point when you're generating past 24 mil annual revenue, then yes, you have to target specific segments. But if you, as an e-commerce founder and owner, have just gotten to the stage where you found product market fit, which to us is based on 30,000 per month revenue that you have generated over a period of 3 months stable, you're at that stage where you found your product market fit. and then all the way up to, let's say, 400,000 per month in revenue, you can utilize the methodology of generating a viral ad to get you to 1 million per month in revenue. And again, these are practices inside Sugatan that have been catalyzed by independent thinking, because we're curious, because we take the breadcrumbs little by little and put one foot in front of the other, and experientially in the real world application of what we do, creating a viral ad is not segmenting towards just millennials. It's really understanding that across demos and across generations, they have a similar relatable pain point that your product can produce. And historically, 2 to 4 viral $1 million ads, and now really $1 million epics, is what can get the e-commerce business to 1 million per month in revenue.
Definitely.
And that's the definition, that's Sugatan's definition of viral. And that is our methodology. And I think that in the most recent case, we had a founder say, maybe it was their 6th or 7th bestseller SKU in their store. And when they ask us to advertise shorts because it's now summer, and yet it's not the top, it's not selling, but they're trying to gain incremental revenue through ads and what we do. It takes so much effort to create a viral ad that you're sort of like pulling away from our team's attention and focusing on creating that viral ad, because that is the 90-10 after the evolution of the last 4 years inside Sugatan, where we tried influencer marketing, we tried Pinterest advertising, we tried Snapchat, we tried YouTube, we tried Taboola, right?
Tried everything.
We tried everything. And the 90-10 in Pareto's rule is really a viral ad and media buying. The media buying has to be of high quality. I can't emphasize that enough, that you can't have your ad buyer just say, I'm waiting for a viral ad, because it's the balance and the beautiful marriage of both. And now we're really focusing on what is a viral ad. It takes a lot. And so I think that it's the founders' job to actually don't put it at top of funnel acquisition. Don't make your ad buying creative team produce creatives for your 4th best-selling product. You want them to focus on your top 3. That's assuming you have revenues below 24 million annual rev. After 24 million annual rev, you need a professional marketing team. You can't really scale that quickly and effectively using Facebook as the catalyst and now TikTok as the balance of that catalyst. You got to bring in professionals who work for Procter & Gamble's and who work for Sephora's and all of that to really get you to that next stage, to build campaigns, and do the hard ass work of doing campaign initiatives. But our methodology is we output 2 to 4 viral creatives that then get you to that 1 million per month revenue mark. And then from there, you either exit, which is our preference, or you hire a basically professional marketing team to get you to that next step.
Yeah. And I think it's also important to emphasize that, in this level under 24 annual mil, right? Again, from our own experience and our own cases, viral ad itself covers for many things that are imperfect in business, right? Let's say website. We have cases where our website doesn't look branded. Our website doesn't look like best, or even it really looks very basic in some cases, or let's just say lower medium level, right? But once you crack your messaging, right, and once you get those viral ads, this 9 to 10 covers for all of the small perfect,
imperfections.
yeah, things that in the end, all they do is they waste a lot of time, energy, and labor, but they don't give you the return of what viral ad gives. So that's
Yeah, exactly. And I think too, like, again, what are the components of a viral ad? I think it's really important for founders who decide, oh, I'm gonna hire Sugatan to create a viral ad. By nature, a viral ad is it follows direct response principles. That it is person-centric, offer-centric, and urgent-centric. Like, if you follow those three things too, then you will get that to that $1 million ad. Of course, there's the other part of it, which is the Dollar Shave Club type of Harmon Brothers-esque ads that use humor and entertainment, with the product being the focus from beginning to end, and the brand's values being the focus from beginning to end. But
what's important to mention is the costs of producing
the
that
cost
type
of
of video,
producing
right?
that, it's the risk, right? Like, it takes a long time to produce a video like that. The cost is high. We between 50 to 120K, 50K to
produce one
120K
video.
to produce
One video.
one Harmon-esque style video, and that's a big bet.
Yeah, and there are many cases where they do this, hi-fi, high-level, fancy production, and it fails.
It fails because sometimes the product isn't really it's still another thing to optimize. And we've made the bet to actually create an infrastructure of a creative team and an ad buying team that predictably outputs in pursuit of a viral ad that is person-centric, offer-centric, and urgent-centric. Person-centric, that's the most important part, because person-centric means that the focus is on the viewer's pain points, not the brand-centric. Brand-centric means it's brand awareness. You also have to make it, the creative itself has to also follow platform-first principles. Meaning, again, the brand kind of has to take a back seat to making the ad native to the platform. And I think that that's why, one, there's a lot of opportunity in TikTok, because a lot of brands who I think emphasize the brand's aesthetics, the brand's tone, the brand's values, it's going to have a very hard time fitting into TikTok, because TikTok is purely for the people. Like, it's not pretty. It's iPhone-esque. The moment that you try to put a hi-fi, a high fidelity, actually, which means highly produced video onto TikTok, currently, they're so overly sensitive to being advertised on TikTok. And it's not going to work. And so these are the definitions of a viral ad that I think is really important for founders and advertisers and marketers inside the e-commerce world to really pay attention to and recognize. That's the Sugatan's definitions of a viral ad. Admittedly, I don't know anybody else's definitions of viral ad, but I put it in such a high precedence for Sugatan's definition because of the fact that we've spent so much, millions, and we've generated hundreds of millions in revenue at this point, that we've never really taken the time to specify the components of what creates a viral ad. And I find that we're re-educating over and over and over again all the founders and marketers that we work with, because there's a shift that's happening. If you want to leverage this opportunity, you also have to make a choice to adapt and shift as well into these principles, which don't follow the principles of the the way that prior businesses scaled through marketing before.
And what I
Yeah.
also think it is important to communicate here is that, you know, we always try to position ourselves, you know, as this team who generates viral ads, right? But I think lately, because, you know, we constantly get, you know, some leads, and we're talking to them, and we're evaluating business, and, you know, trying to understand their needs. But lately, there was this, you know, a thing that was repeating where probably we are not clear in how much it takes to get to a viral ad,
Yeah.
right? And sometimes businesses just comes to us and, oh, Sugatan, let's produce a viral ad, and like
Even ad buyers, the lazy ad buyers.
yeah, and you know what I mean by that is that most of the viral ads are still comes from a sequence of actions and like optimization sequence, you know. So it's not like that type of thing, you know.
Let's give specific measurement. It takes for us on average 3 to 4 months to generate a viral ad, and that is on a conversion rate of somewhere between 1 to 2% from total single assets that we produce. Take that, hotshot.
Yep. And you know, yeah, the specificity is that, you know, especially when we start new partnerships, it still takes time to get there, you know.
Yeah, exactly.
But once we're in this like ongoing workflow already, then like supplying an account with a viral ad every quarter is more than enough to scale.
Exactly.
It's more than enough to scale.
First, the second bullet point I want to make about following the definition of a viral ad is really creative mix innovation, which I think is really important, because when we first started Sugatan, I basically randomly named video ads BuzzFeed style ads to describe, I think, what dropshippers' videos followed a format. And BuzzFeed,
And then it became official terminology.
I guess, I don't know.
Video.
Yeah, because then I started hearing other people say, oh, BuzzFeed style videos, that's what I would use or whatever, which was so freaking interesting. But I hope that it's obvious that by this point, but I'm just going to iterate that BuzzFeed style videos are completely, they still actually have some potential to like work inside Facebook feed in particular for the older demographic, but it's obviously something that we need to veer away from. And one of those, the creative mix innovation is really about experimenting with new formats in the way that you do video ads. Formats are really adapting to it being platform first creatives. And so you want to, I think one of the things that we covered that's obvious is that all the attention is going to IG Reels and all the attention is going towards TikTok. I think the most interesting thing about TikTok is that you see the same style being transferred over onto YouTube with YouTube Shorts, and I'm even seeing it on Reddit in terms of like the top Reddit feeds. And that is basically signaling you need to create your creatives around that format. And so now in our creative production, we're actually essentially creating IG Reels / TikTok-esque videos, and it's really emphasizing it being platform first. And to break that down, you know, I always say that advertising and marketing principles will stay the same for forever in terms of direct response. But you just have to adapt those same principles into the platforms themselves, making it native to the platform. Now you have to like pay attention to music, you have to pay attention to pacing, copy format or like the actual copy itself, I think, is pretty similar, but you can get away with creating a narrative through just copy without anybody really talking at the moment. And it's so, I think on TikTok, it's a lot more demonstration based, even on IG Reels. First second matters, tone matters, and then native copy treatment style matters. And so you really have to innovate in terms of your creative mix. The second thing is, you know, for us, we are now adding in advertorials, because advertorials, and I think we have to really define what advertorials actually mean, because one thing is that all of us are naming things differently across the industry. So let's define advertorials, which, by the way, before we go deep dive into that, advertorials has been a scalable, effective, creative mix that our graphics team produces in collaboration with a copywriter. So, and it's scalable. So let's define advertorials.
It's a long copy first landing page, right? It's just it's a copy focused.
Is it a sales page?
Well, again, this is where people have different definitions of what sales page is, right? So I would just prefer to keep it super straightforward so everyone would understand it. It's literally a page where it's a long copy with some just simple images or whatever in it, right?
Education forward.
Education and value forward, of course.
That's the
But
most important
the
thing.
format itself is copy first, you know. And it's really interesting because this now we use the strategy on a way broader scope of accounts, right? That we work with, right? But the story of how it first started, I think, is very interesting, right? Because it first came out to be working for us in skincare or beauty type of accounts, right? And the way it all works, right, is that the creative does not speak about the product itself. It hooks them on a very big pain point, right? And approaches from a controversial, shocking perspective, right? So it creates a lot of curiosity. Usually those ads have incredibly high CTRs, which indicates that people, you know, it's a thumb-stopping creative, right? Now, our philosophy to why it started first working in skincare accounts was that, you know, we started thinking from a demographic perspective first, right? So now we made an assumption that women who have, let's say, acne problems, most likely a lot of those women have already tried many products and products didn't work, right? And the bad experience in them trying to solve the problem has pushed them to be okay with reading in the first place, right? I guess normally you would think, like, with like these low attention spans and everything, like, who would read a long as copy for like 3 to 5 minutes, right? But I think it started with that audience for this particular reason, right? Because the problem for human does not go away. They still need solution, but they don't have the right solution. So they, you know, this itself is pushing the audience to be okay with reading because they're doing the research themselves, right? And they're trying to like understand it, right? So that's where the advertorial, if it's well written, if you give enough value, if you give enough education, if you relate yourself to that human in a way, you know, I've been there, you know, I know where you are, I feel you, I know your pain, you know, and I want to help you, and here's, you know, the education and value I'm giving you, then pages convert really well. But so that was, I think, maybe the primer like concept of this advertorial strategy. Now it was mastered by our graphics team to such a big extent that the creative becomes such a huge driver that it actually works, like the creative works without even pairing creative with the advertorial, right?
So then when you
Because
pair them,
and it's as always, it's in the messaging, right? It's in the right hook and the right catch that's going to be shocking, that's going to be controversial, that's going to be like real attention stop, right? So it has really evolved over the time, and it's mainly, you know, our graphic team is developing this whole thing of you know, becoming better and better and better at identifying those like the exact words that just makes you stop. Right? And then, and it's funny, it's interesting because like most of those creatives are just images. They don't show the product. They are not branded. They're not like, they're like, it's from the outside perspective, maybe you would even feel that like, how could they work, you know? But I think, yeah, like from my perspective, the whole secret is really behind, you know, the shocking, controversial factor that, you know, because at some point, if you attract like too much attention on your ad, like even if the quality of traffic is not good enough, like the numbers will play it out, because your costs, the main pattern with advertorial ads is that the costs are like extremely cheap, as if they would be a viral ad. Not always they become viral ads, you know, because sometimes, yeah, you know, this cheap traffic not always converts, but still in many cases the cheap costs offsets the quality of the traffic. And we're talking about Facebook traffic, the cheap costs in Facebook traffic, and by cheap is like under $1 costs, you know, which is not something that
under
people,
$1 of link CPC.
which is not something that people see anymore in Facebook, right?
I know, exactly.
Yeah.
And just to be more specific about controversial topic, you know, your health starts with your gut. That's a really controversial headline that has worked before. You know, blackheads aren't what you think it is. You know, something along those lines that throws in irony, or you thought it was this, but it's actually this kind of thing. That's the format that we see working. When I say when you think it's this, but it's actually this, it has to be topics that are actually like very, again, a topic that transcends demographics. It's relatable across all demos. And that's really the starting formula, I would have to say, in thinking about controversial messaging around advertorials. And I think too, when we actually like talk to founders, when they first come to us to work with us, they don't, whenever we ask like, oh, have you done advertorials yet? There's like this big sort of question mark, like, I don't know, that's kind of like, never heard that worked, you know, but we've been doing it for a while now and it's extremely effective. And, you know, I don't think it's something that we should have to really sell, because, you know, it's just effective. The fourth thing that we really are currently experimenting with in terms of creative mix innovation is really experimenting with extremely short form content. Short form content, like how many seconds? They're like, I want to, they're not boomerang style. I mean, like boomerang is a little outdated to me, but it's kind of like that very fast 3-second like video format that really is very digestible, that the graphics team is currently experimenting with right now, and we're seeing some results in it. So in general, we really recommend that you guys really do creative mix innovation. Whoever your creative strategist is, or if you're a creative strategist, super important to innovate in terms of the creative mix. And then the third subcategory inside viral advertising is our messaging research methodology. Inside advertorials, inside the videos, ads, inside our graphics ads, there's one common theme there, which is really strong messaging. And we have an extremely specific messaging research methodology that I actually pulled this originally from Neil Patel back in 2018, maybe even late 2017, and that shit still works to this day, man. And it was the only e-course that I invested in during the time that I was learning how to do Facebook advertising. And until this day, man, that thing works. And it's actually in our private Facebook group. You know, if you mine our private Facebook group, there's a competitive, no, copy mining is one of those methodologies in messaging research. And, you know, in our private Facebook group, you guys can just search it and then it'll come up. It's one of those that have evergreen shelf life. The tools that I go in there might change and has likely changed, but the concepts are the same. And if you're a digital marketer, you're good at researching on Google what can be in replace of it. And I think that the main thing, though, is that this is actually pretty tough to actually like intuitively understand what is going to be the right messaging for your advertising, I would have to say. Because yes, historically inside Sugatan over the last 4 years, we've had multiple people do this methodology. And there is one other aspect of it that I think is the secret sauce, which is intuition. And I think it's like a combination of like a basically very specific methodology and then intuition simultaneously. And I've seen both independently work, but when you can actually combine both, then it's really effective, because a lot of e-commerce businesses has so many SKUs too. So it's like knowing which SKU is likely to be the one to actually have an ad go viral. That's part intuition as well. But I remember, like, I've seen other copywriters and strategists sort of struggle with coming up with that main messaging headline. And so I think you have to have like an understanding of different disciplines in order to come up with that messaging that can actually create a viral ad. And it takes multiple iterations, but sometimes you can kind of get it in the first three ideas, I would have to say. So yeah, that's a lot with viral ads. Just so you guys know, this is like it's not easy to produce a viral ad, you know, and I think one of the things that you don't do is you don't tell the creative team, just hurry up and get us a viral ad. Or nothing is working, we're just waiting on a viral ad. That's like the worst. And actually, it's a trap, you know, and it's success is 50% media buying and 50% creatives. That is without a doubt, because we've gone through 4 years of iteration on and testing and failing and experimenting, and that is the final conclusion. You have to have a really great balance of both.
We just had a conversation with a guy who was, you know, sharing his belief that, like, you know, nowadays creative is way more important than ad buying. You know, that it's all about creative and messaging. And yes, he's right for 50%, because another 50% is when, like, the way I see this is that it's true. When an ad buyer gets a viral ad, it becomes easier, it's a more chill time, 100%, right? But what do you do in between one viral ad and the second viral ad, right?
Which is a long time, typically.
Yeah. So this is where another 50%, which is media buying and media buying innovations, needs to come in to make sure that we can still, you know, gradually scale, you know, without being in a place where we'll get a viral ad, we scale temporarily, ads get saturation, we go down. And we stay down until we get the next viral ad, because then your business is just at a too high risk, you know, that's mainly it.
Yeah.
So
it's kind of like the same as like depending on a celebrity to like post about your product, and then you get that uptick in sales, and then the time in between you're just struggling at that point, and that's not a fun time for anybody.
yeah, and
You know?
and you see overall, like, everything that we're talking about, it's all about minimizing risks, maximizing returns.
Yeah, exactly.
It's like literally every single topic that we touch here, it's all about that from business perspective.
Yeah, and like it's most important to those who are just starting out. As in, for us in particular, there's going to be those of you who are just starting. You have barely any revenue. For us in particular, we're really speaking to those who are generating somewhere between 30K per month to 400K per month in revenue. And you could be part of a really big portfolio of private equities, and you're just pumping out, you're buying out these smaller e-commerce brands, or you're a big company and you can see the potential in scaling this one product SKU that's generating 30K per month on its own. It can go to 1 million per month in revenue on its own. So it's not just, mom and pops and husband and wives or college buddies that are just starting e-commerce businesses. I think this applies to, PE firms and anybody who has anything that is generating somewhere between 30K per month to 400K per month in revenue. This methodology will get you to 1 million per month revenue minimum if you execute effectively. Now I'm going to go into the fifth pillar, which is what we call business design, which is like, if you have a better name for it, let us know. But like right now, it's just business design. What the heck does that mean?
So mostly everything that we have been discussing here comes from our perspective as a part, because we're a partner that partners up with the founder who have developed the product and build the brand or business, right? But this specific topic is more about the other 50% that's not in our control, that's directly in founder's control. 100%. And it is all about optimizing your business numbers, again, to minimize your risks and to maximize your returns, right? So the main metrics that we have in business structure is your COGS, SG&A, your marketing investment or costs, and your EBITDA target, right? Whatever that is. Now, if we make a quick step back and remember that, again, we're coming into this bear market into these uncertain times, right? And we also acknowledge the fact that over the past few years at least, the investment pool that was put into e-commerce businesses in particular has been enormous, right? So more and more in our competition, we can see funded companies, right? And I mean, they have their war chests, they have their funding for the, bear market times, right? Which basically means that they can afford, maybe to pay a higher acquisition cost, or maybe they don't need to show any profit for another 2 years, like depending on their, whatever their strategy is. What it does for all of the not funded companies is increases the risks of finding yourself in a place where the buying intent might be going down, but at the same time the costs will still keep increasing because those funded companies are still pushing the auction cap higher because they can afford it, and that's their plan, and they can burn the money, right? So now you find yourself in a complicated situation where only because of that you can run out of business, unless you have viral ads, like a lot of viral ads. But since it's not that easy to get a constant stream of viral ads, many businesses will face risks. Now, the whole purpose of optimizing your COGS, SG&A, and cutting down on EBITDA is so you could afford to operate on a lower total ROAS KPI than your competitor, right? What it basically means is that if we both have the same product and we're selling the same thing, right? And I need X2 total ROAS, but you need X3 total ROAS because, for example, my SG&A is trimmed on 10 or 15 or whatever percent. This simply means that I can outbid you directly in the auction because both of us we're gonna fight for the same customer, right? And let's say you can pay $50 per acquisition, I can pay 100. So simply by just that, I'll win over you because I can pay more, I can bid more, and I'll be higher in the auction than you, right? Yeah. Now, the only way for you to be able to operate at a lower total ROAS KPI than your competition, I mean, EBITDA is simple, right? All of you founders, you have a choice between, do you want to have a lower profitability but scale faster, or do you need a higher profitability but scale slower? So in times like this, the smart choice, of course, would be to trim down on EBITDA. So if average, we say it's 10 to 20%. So in down economy, it should be not higher than 10%. To save as much room as possible for your marketing investment, right? So let's imagine this: you have 100% of total revenue. 10% is going to be your EBITDA, right? You have another 90% left. Average COGS percentage that we're seeing, healthy COGS percentage that we're seeing is going to be around 25%, right? So 10 plus 20, you have 30. Still 70% left. The third component is going to be your SG&A, right? So SG&A, service, general administration costs, so all of your fees, all of your,
subscriptions,
salaries, like all of the costs outside of your COGS.
Equipment.
Yeah.
Travel costs, whatever.
Let's say it's going to be another 20%.
Yeah.
So what I see nowadays as a good, well-optimized business design is when your EBITDA plus COGS plus SG&A fits under 50% of your total revenue. Because it means another 50% is purely your marketing investment, which means you need X2 total ROAS. So that's mainly the whole thing. You want to make sure that from all perspectives you can, again, reduce your risks, maximize your rewards, right? So I do want to say that this particular thing is like the top tier priority of things, right? Because if your business design and your balance between EBITDA, COGS, and SG&A is going to be off, then you're already set to fail sooner or later, or you will find yourself in a place where you hit your ceiling and you cannot scale past some point because either way the cost of advertising, they're never gonna shrink, So at some point you'll just find yourself in a place where your numbers don't match because it's still a formula, it's still like all of this is still numbers play, like a lot of this is numbers play, so you need to make sure that you optimize your numbers to set yourself for success, basically. And
it's important because this is such a customized, Sugatan specific way of understanding, or it's such a Sugatan specific thing, this thing called business design, which is based on percentages rather than actual numerical value, right? It's based on a 100%. What percentage is your COGS? What percentage is your SG&A? What percentage is your target EBITDA? What percentage is any liability that you may have on your books, i.e. loans? And then on top of that, then that's what's left is your percentage for advertising or marketing spend. And, I don't know if this is actually normal for big businesses. I don't think so. But in the way that we scale and advertise businesses, this is how we approach things to get to a total ROAS, and it is a bit of a struggle for us to reinforce that we're scaling with a total ROAS KPI. And I feel like a lot of founders, they don't really, at least the ones that we've worked with, I would say about 4 out of 5 at a time, don't really understand this part, and it's quite a struggle for us to really explain and convey that we're protecting your EBIT margins. Again, this is our ROI positive scaling framework, right? So we're doing two things simultaneously. We're scaling you and we're protecting your EBIT margin simultaneously for the sole purpose of driving up the value of your business upon exit. And like, a lot of founders don't really understand that. I think a lot of founders, they could just hear from their friends, oh, you can make money doing e-commerce. Look at, I made 100,000 this month, and people just hear the 100,000 and they're just like, yeah, I'm gonna get into that, you know. And then like, you gotta actually fucking do business, you know. You gotta actually run the business as a business. And so by the time they come to us, they just hear that we scale them from 100K to whatever, a million. And they're like, yeah, just scale us. And we're like, all right, so what's your SG&A? What's your EBIT? What's your COGS? And they're like,
What's that?
I don't know, you know? And it's like, all right, well, you know, let's educate you because, you know, you got to get this total ROAS. What's the target EBIT? And they're like, 25%. It's like, okay, that's an arbitrary ass number. Then we have to educate you. It's like, well, the lower your EBIT, the more that you can actually scale the brand. And there's a lot of education that kind of comes in inside the e-commerce realm, because a lot of people fall into it because they just want to quit their normal day job or whatever it is that they're doing because they're just hearing that in e-commerce you can make a lot of money, right? There's a whole bunch of YouTube videos out there. There's like drop shipping, you know, that's kind of like how you started. You know, there's a lot of us started that way, but the reality of the freaking like landscape is that you have to run it as a business. And this is business design. You have to get savvy in designing the business in a way that it positions it to be ROI positive, so that you don't find yourself in a place where you're like, well, I don't know my numbers. Oh shit, I'm not actually making any profit, you know, and then you go out of business. So
very common myth that I see out there is that there is a section of founders that are like, why would I want to decrease my total ROAS KPI and decrease my EBITDA percentage? Like, does this mean that you guys just want to spend more
does that mean,
of my money?
That's the worst
right?
part is when they come, they just think that we're just trying to like get the retainer.
Your EBITDA's dollar value is going to be higher as you scale with a lower percentage, right? And you will enable your business to scale at a faster rate because, again, you can pay a higher acquisition cost than your competitor, which means you will outbid your competitor in any auction. And Facebook ads and TikTok ads and all of the ads, it's an auction and it's bidding and we fight against each other. And if I can pay more than you, I win.
But it's not only that. The third thing about that is that you drive the value of your business's fucking stock value up.
Correct.
So you're doing that simultaneously, right? And so I've only met one founder out of all the founders that we've worked with that actually wanted to hold their company and be the LVMH, which owns Louis Vuitton and all of the luxury brands, meaning they want to create a legacy brand. Everybody else, at some point, you want to exit, you know? And so in addition, you're also increasing the value of the stock of your business, positioning it to exit at a higher valuation. And that's really what we want to drive home, because I think that there are a lot of traps, or at least nobody goes to business school really. And also the things that were working before in traditional marketing and the way that businesses have been scaling, it's just, we're in a very innovative time period. And you have to, I think it's good to redraw the map, or at least question the status quo that existed prior. And I can't pretend like I went to business school, you know, and I know all the terminology. I mean, Sugatan in general was built off of scrappy underdogs, including myself. So kind of inserting ourselves into a business world that already has a way of operating in a status quo. You know, I don't know what that is, but I do know that it's the time to re-question whether what principles in business kind of stood before, especially now that we're in a down economy, there are ways to have ROI positive scaling. And there are those advertisers and marketers and brand advocates that will have an issue with the way that we do things because it's not brand first. And I don't think we've ever claimed to be a creative studio that essentially works with creative directors. We work directly with founders who are here to de-risk and drive profitable scale and actually leverage an opportunity that they're seeing in order to empower their own lives. And that's really who we advocate for, you know. Not the, you know, we're not super organized, we're not huge or anything like that. We're about mastering scale, really.
And enjoying the process.
And enjoying the process and learning what it takes to do that, and for us to learn more about ourselves and other people in the world and leveraging those opportunities. That's really what I feel is sort of the underlying tones of why Sugatan exists. Last thing I want to talk about is that I made a decision to create the closest to what is an industry report, especially that we are coming into some unprecedented times inside e-commerce right now. And the industry report is an ROI positive scaling framework. I'm still working on the title, but that describes it pretty effectively in terms of what this report actually entails. And it is not meant to be a final paper. It is meant to be a dynamically evolving report that transparently tells everybody in our world and in our community what we're testing, high-level concepts in 3 different areas, which is inside budget management, you know, that's Matas's world, that includes ad spend, that includes attribution, that includes analyzing buying intent in the markets. My world, which is creative strategy, which is the overarching messaging, video, graphics, advertorials, and then in Maryna's world, which is agile processes, which is essentially containing the chaos innovation within social media advertising and marketing for e-commerce, how to reduce friction, people management principles, which are all extremely critical to the quality of execution in any of these things that we're trying to accomplish. And you know, we want to break it down to what we're testing, what has potential after testing, and then what's actually proven 3 times. And that's really what the industry report is going to provide. This is the beginning of us introducing these concepts to you guys by really, my whole mission is to deliver as much and to really empower people, you know, coming from a place that's, you know, really leveraging the current innovative times that we're in right now and how to maximize the opportunities. So for people like us, we're going into the 4th pillar of ROI positive scaling, which is the operational framework that ties all of this together cohesively and efficiently to achieve quality execution. Just as equally important as strategy is the operational and strategic execution and the quality of that execution, which underneath that is, I think, one of the most difficult aspects, which is people management. And it kind of branches out into multiple, how do you call it, dimensions in terms of people management. And I'm just going to let you speak, because I think maybe my most important question for you is, we've implemented Agile as the operational framework, and you really are head of Agile inside Sugatan. So how does Agile really operates as a effective framework inside what we do inside Sugatan to ensure that we actually achieve what we're trying to achieve?
Yeah, I think I will start a little bit from the far, because I wanted
Yeah.
also to tie it to a bigger topic of ambiguity of the future, right? And one of the core things in Agile is leadership in Agile, of the people that start from stating their own ignorance of solutions. And everything that you want to achieve in Agile is usually a problem you want to solve, and you trust a lot in your team. You put a lot of trust in your team to solve these problems. But you as yourself, you do not dictate people saying, do exactly this and that's it. You allow team to function by themselves. And from this standpoint, we need Agile framework, because if we manage people very, very directly, we will lose the insight that we ourselves may not know something, and we may not know what we don't know yet. And we may get too certain and too sure, and that would stagnate innovation that could come from other team members. So that's why we wanted to implement Agile, first and foremost, not even from the infrastructure standpoint or even like hiring people to maintain Agile or coach Agile, but from the Agile values standpoint. And Agile values are about collaboration over working in silo, and about being able to respond to immediate challenges over following a plan. So with Agile, you should be able to derail from the plan if needs to. It's about, especially for marketing, that you want to do more rapid iterations than some big bang campaigns. That is something that previously, when we say professional advertising agency, right? We're also professional. But what we mean by that is they're professionally capable of building big bang campaigns that drive brand awareness, right? We are professional in performance marketing, and we should be agile and focus on rapid iterations, rapid optimization, growing from immediate positive signals and findings over building these big campaigns, especially now when we need to adjust to unpredictable future, right? And the last two ones is...
So sorry,
yeah?
before you go into that, I have questions for you. I mean, this is so fascinating because you,
Yeah.
I think, summarized, I think, the one way of, I think, a lot of people understand doing it, which are these, you know, campaign initiatives where every quarter, and I think big brands do this, and it's imperative, and let's quantify big brands. To me, it's, in our world, it's when you're generating more than 25 million in annual revenue, where you could do it before that for sure, but it's just, you know, a different mindset and approach, where you do campaign initiatives every quarter that you choose, as opposed to iterations on an ongoing basis that is based on what's actually happening, what just happened, you know, and that could be what we talked about in terms of the market signals for buying intent. That's in what happened in terms of how effectively we manage the budget, what creatives are actually performing, you know, maybe some aspects that the founders made some decisions that impacted the actual scale and results, or the supply chain, something got disrupted, and we're iterating on an ongoing basis, as opposed to just coming together, thinking of campaign initiatives, producing content for that specific campaign and pushing it out. Okay, I just had to summarize because I think it's important for people to really understand the difference between the two, because Agile is really meant for ongoing optimizations.
Yeah, and I would even say from the perspective of standard advertising, when people exist in
Correct.
360 campaigns with multi-channel campaigns, we oftentimes face creative directors. I always call such creative directors ones that run 325 campaigns because they miss on the way that like medium is the message that we need to be native to the platforms. They miss on the aspects of performance marketing, and they just think that resizing their assets would create enough success. I consider it not the best way to treat 360 campaigns, and it's totally possible to implement performance marketing, like some campaigns to be realized through performance marketing. For example, sales and launches, right? They can be highly branded as well and still perform for us. But we need then to have creative allowance to do what we know is the best for that, and also iterate there. Learn from what worked in last sales, what worked for last launches, what type of content should we produce, and have a quality collaboration. And that's how basically like we can still run ads that are related to campaigns. But oftentimes what this like serious, or how we call professional advertising, is missing is something that they should have learned in their fancy schools, since that medium is the message and they should stay close to the medium and keep it in mind, and not just project creativity onto whatever it is shown on, right? So yeah, and obviously if you do performance marketing, having very long campaigns, that's why I say sales and launches, those are short campaigns. Having very long campaigns can turn out to be a disaster. What if you know that it's bad first week and you still need to run it for 4 weeks more? Yeah. I would prefer if we focus our the brilliance of our creators and media buying effort onto something that does show positive signals. Right, so even if we like step into like running something related to the campaign of the client, we want to be able to still treat it as everything else, be able to turn it on and off, iterate, and so on and so forth. So that's why we actually do value testing and data over opinions and conventions. So we might be like unconventional in this regard, especially in comparison to like standard advertising, but we have data to back us, right? There was some mentioning of like comparing us not being like graduates of business schools. I personally spent 10 years in academia, not business related, but I know one thing from
3
science.
master's degrees.
Yeah. Just saying politics, social science, design. But I know one thing for a fact from science is that hypothesis is proven if you can run tests, and this test is repeatable and produces significant results, the one that we can rely on. So that's what we try to do. We try to measure things, and we try to measure things in both quantitative and qualitative ways. So that is why the last agile thing that I want to mention is that we need to run numerous small experiments against few large bets. Again, choosing like we want to put the campaign and do like 50K shoot and then run it for 6 weeks straight might be a little bit of a big of a bet. Mm-hmm. And it can like bite you back. And it can be an interesting thing from a standpoint of investment if people do have the spare money to do it on top. But what we are focusing on is scaling profitably, right? So we need to keep an eye on the price and on our goal and build ourselves around this goal. And if you want to bring value in something which is process that doesn't have an end, or we may say exit is the end for us, yeah, right? Mm-hmm. But until then, it's very process driven. We need to focus on small experiments. We cannot jump from one thing to another. Jumping will not help us.
What do you think are the factors to success? Gosh, I hate saying those words because it's so cliche. Maybe not factors to success, maybe a better way to ask is, what are the critical elements to agile, speedy execution in a remote international team?
So, as we know, we need to collaborate, right? And
Well, I think that a lot of founders are either remote, working in the same time frames, or international, or both. And so Sugatan operates as both.
Yeah.
So, yeah.
So yeah, I'm just saying, like, we need to collaborate. Yeah, with clients we need to collaborate too, not just with ourselves. From, if you're talking about collaboration, what is collaboration if you exist in different times and spaces, right? You need to have
cultures.
And cultures. The first, we need to target the time and space, right? That's the first thing, and it goes into being very careful about scheduling and about how you design around autonomy and connection. So that means that we need to have regular calls for people to talk to that work time-wise for everybody. And we need to create a system that people co-plan together, and they also co-evaluate results of what they did together, but they are allowed to desynchronize for the execution, because obviously we would all run very differently. Even within the same time zone, a person that prefers to work in the evening, somebody prefers to work in the morning, right?
Correct.
We need to define what people must show up to, and then allow them freedom to move in between. For this, we also need to obviously support it with very clear infrastructure of how these calls are facilitated. What is the agenda of the call? And if we prioritize ideas, what is infrastructure of prioritization, which goes into like product backlog, sprint backlog. So how do we plan what we execute mid to long term and say short term, because we need to iterate very rapidly. The same, we need to very clear infrastructure, templating, and so on for the way how we report our results. And any hypothesis that any team members makes should be, we should achieve consensus of how do we measure it, like what are the KPIs we would measure certain ads against, which is kind of, can be our benchmark KPIs for totally new ideas, or if we optimize something, we want it to outdo what the initial creative was, or any other effort. If we optimize, we want optimization to perform even better. And we need to always have this very transparent structure that allows people to be held accountable in a comfortable way. I always say that a Sugatan is a place where you can be yourself as long as you like to challenge yourself. So it also obviously ties into personality. Not every personality deals very well with agile. Some people are very waterfall, which is another very linear.
Yeah, this happens and this happens
and this and this. And some people operate with this way better. These people can be good administrative support that execute some standardized procedures, like SOPs. But they may not be very best creatives to like fastly decide, iterate, and so on.
Or operate in chaos.
Yeah, I would say it's called ambiguity tolerance, and obviously with current state of economy, I think the one with ambiguity tolerance would be winning.
Yeah. Ambiguity tolerance, just elaborate on that just a little bit.
So yeah, we exist in quite volatile and ambiguous time. And there are also environments that have tendency to be naturally ambiguous and volatile, such as, example, startups. Small businesses that just in the face of rapid growth. This kind of businesses, they do have very specific thing for them, that they exist in this ambiguous environment and they are volatile because the future is unpredictable, and they are higher risk, higher reward oftentimes too, because we all know that somebody who, like, I don't know, could bet on something with the lowest chances of winning, then it wins, that person would win the most.
Yeah.
So in a way, it's very high risk environment.
Yeah, and we have a way of trying to be proactive
Yes, and
in
mitigate.
bringing in people who are more ambiguous tolerance, which we use a tool called predictive index. And in predictive index, as the tool, you can see how they score from the way they operate in a more flexible work style versus structured work style. Flexible work style means, giving a concrete example, I remember one of our video strategists, she scored all the way to the right of structured inside predictive index, and we had one of the founders who was also acting as a creative director for the company. She would always sort of cancel and not show up in the approval calls where we would introduce the creatives that we were going to put live for the week. And this video strategist, she freaked out because of the fact that she could not rely on the founder showing up reliably. And she got so stressed out that she ended up quitting because she just could not tolerate the unpredictability because of the fact that she needed an incredibly structured work environment. That's how she scored in predictive index. And that's one example, I think, that is really fitting from my experience and my observation, that only the really defined roles we can put people who prefer to have or get energy from a structured work environment versus, you have to do the work of understanding. Does this role require somebody who can adapt really well to flexibility, ambiguity? Can they be proactive in solving for the problems, for example? And that's part of building a strong team as we go into an uncertain period.
Yes. And I think it's also ties into self-leadership and availability. These are two big items worth discussing, like availability. We certainly oftentimes think that people who demand lots of structure, they can be in all types of assistant positions, right? And support people that exist in more chaotic environment by providing them structure. But oftentimes people that like structure way too much, they also structure their availability way too much.
Correct.
And I'm not saying being available outside working hours, they make themselves unavailable during working hours.
Correct.
And that is value that we need to make sure if somebody is in a supportive position, executing SOPs, or collecting things, or scheduling, or passing the workflow, that they also can be available and responsive. And I think ability to be available for other people comes from two things. First thing is self-leadership, what makes people proactive. They can manage themselves, they can ask all the questions that they need, right? So if people have very good self-leadership, they would most possibly try to execute things and get all the information and share all the information regardless of the impediments. They would aim at overcoming impediments, making them visible. And the second thing that is important for availability in general is empathy, right? And that is something less measurable, but I think that we all come together for the love of what we do, but also from the deep sense of respect and camaraderie with each other, because what we know is when people underperform, their work usually falls on people that perform very well.
Correct.
And we want to avoid such situations because levels of stress oftentimes correlate very strictly with the way, with the current state of the accounts that we have. So we do not want people to deal with unnecessary stress. Now when we know that there is ambiguity, there is potential external factors, we want to design our relationship, build from the both standpoint of like the team, build it from A players, and from the infrastructure, make it very transparent, agile, dynamic, with everything visible for everybody. We want to minimize to like the bare minimum internal stress factors, because there would be enough of external stress factors. There would be more challenges of, for example, building client relationships and making sure that client is heard and both understands our positions on the subject and we achieve some sort of social contract between us. There would be ambiguity in the state of the economy, in the state of buying intent, in the all changes of the buying behavior, changes in the platform. We have so many things to deal with that can create external source of stress. We need to be here together to not create all that much internal sources of stress. And the biggest internal source of stress that can ever be, actually there are two. One is I cannot find what I need to find to do my work.
Yeah.
And the second, this person didn't do their job, I had to do it now after my job. And we want to not have those two.
I'm going to summarize what that is. I believe that quality of work life is directly related to being able to control your day.
Yes.
It just comes right down to that. And that's the reason why I chose Sugatan to be 100% remote and autonomous as much as possible from day one, which has its own set of issues for sure, but it all was for the understanding that a high quality of work life rooted into everybody feeling like they had control over their day. One pattern that I noticed is when they don't feel like they have control over their day because they're reacting to situations that they could not anticipate being an issue that they had to solve for, that's when the stress level goes up and then the burnout goes out. And one of the repetitive factors of that, again, that exacerbates that, aside from the external things that we can't control, is when we have B and C players. Maybe it's a good time to define what an A, B, C player really is, because I think every organization kind of suffers from this.
We already touched on what A player is. Somebody who acts with urgency, somebody who respects themselves and others. That means that they act.
Someone who is
from that.
proactive, it's very important.
Who is proactive, who aims for collaboration and transparency, who asks good questions. When we ask anybody what is A player, we say the person who asks good questions, because we have big lists of what is A player for every position. But when we look at some of descriptions, for example, knowledge of strategy and things like this, we see that some things are trainable, but they are trainable if personality to be trained is already there. If people have growth mindset, if they want to learn new things, they would learn new things.
Yeah.
If we provide,
without being asked to.
Yes. And what we can do if we want it to happen faster, or if we want to have our own hands on like how fast it's going to happen, obviously we need to provide a good environment, we need to provide mentorship, and we even sometimes need to provide challenge and deadlines for people to step up and learn something, right? If we want to have more control when they arrive to the point, right? But generally these people will be learning things regardless, whether we like it or not. These people aim for knowledge, collaboration, growing their expertise, and they are results driven. They like to see results, they like winning. And I think that's pretty much it, what was the core of A player. The person who wants to win together with others, and they will do everything they can to win as an individual and as a part of collective, both. The C player, on the other hand, is the person who is like kind of has a fixed mindset, right? So they are very fixed in what they are. They don't want to learn anything new. Oftentimes in the position, they may come from the background with a similar position, but they did completely different things to what we are in Sugatan doing. And they do not ask questions, don't want to learn. They find excuses why they haven't learned things. Usually the excuse is like,
I wasn't told to do
I
that.
wasn't told, yeah.
Yeah, I wasn't told. And to iterate or to reinforce, this is just within the context of what we do. This is not a generalization amongst all people.
Yeah.
It's what is the aspects that are detrimental for us to drive ROI positive scale.
Yeah, I would say that maybe you can be like very stable, very fixed, very told what to do junior accountant, right?
Yeah.
But you may not have that as a creator, as a media buyer, as a person that like plays bets basically every day. You may need to be able to change and grow. And in creativity, in art, it's everywhere. You cannot stay the same unless you are a legend, right? But usually, like people in collective can achieve something more legendary than like singular, and like with a higher chance, let's say. You know, there's a lower chance to be born genius, but it's a high chance to like get together with some people and make something great. So the problem, another problem with C players is, on top of the excuses, the C players is a mindset of people that I would call like users. They try to use others and use the circumstances, and oftentimes they would use or like say misuse privileges that, for example, remote international environment gives them.
Autonomy,
Yes.
your schedule, yeah.
And that can be something that on an other person would do the same, but they will do it right, so it will not be a mistake. Example, notify people that you are going to vacation. Example, say, hey, I have an emergency, I will be offline today for next 8 hours. These simple things come from this point about respect, desire to collaborate, desire to have transparency with others. And these people just oftentimes don't think about others all that much. And it's very important to establish boundaries with team members about that, because the boundary is not about the vacation or the emergency. The boundary is about communication. And communication is what we sign up for, because we do not have almost any mode of involuntary communication. We are not coming to the office that we will have to stand in front of each other and talk
to each other at the water cooler, or
Yes.
when you're microwaving something and you just happen to be in the kitchen.
So we already have to put an effort to talk to each other. That means that if people choose continuously not to make this effort, they are C players, because they are not suitable for remote environment. Some of these people can perform brilliantly in the office, in the corporate, in more rigid environments, and feel absolutely fine. But if it's remote, if it's national,
Multi-time zone.
Yeah, time
because Sugatan operates 24 hours, literally.
yes, and if people do not desire for communication, they will also like going into this next topic, right? That we are also coming from different cultures. Person that is not interested to connect with others will never understand other cultures, and they would apply the most bare minimum stereotyping about something instead of trying to learn where others are coming from and why their, for example, even style of communication is different to others.
Correct.
Right? It might be that like English native speakers would not bother to understand that there is some aspects of language that will come from people just because for them English is second language. And their speech may be less eloquent, or for example, less courteous, right? The word.
Matas calls it
polite.
saying it beautifully.
Or sometimes it will come across like literally less polite. Just
Yeah,
because
right.
it's a culture, for example, like I'm from Eastern Europe, right? I like to be more direct. And sometimes I would come across as less polite because I like to be more direct. But for me, people that are less direct will come across as less polite too, because I think why you wasting my time, right? If we can get into trouble and fix it. So, but if I make one step ahead to understand where people are coming from, that's their culture, that's why they're saying the things that they're saying, and they prefer to be talked to. Like, one thing about love languages, love other people not in your love language but in their love language. And the same, I would say, try to talk to people and extend yourself to understanding others. But if people do not choose to be transparent, communicative, collaborative, they close themselves from both them understanding others and also from others to understand them. And if person is just chronically underperforms or mistreats team members or being unavailable all the time or just fails the process completely, oftentimes people also will not extend the kindness of trying to understand this person. But they would extend every time if person seeks connection. Because it takes two to touch in our differences, what makes us connect. This makes us connect as people. It's fine to be different as long as we are talking about who we are, who we want to be, what we do here together, why, what, how, and do it.
That requires, I think, a high volume of communication. And I think one of the issues that we grapple with is creating a structure that fosters that kind of communication without having 1,000 Zoom meetings. Just because, for me personally, I hate meetings, and I think I hate Zoom meetings in particular. I'd much rather do this because this energizes me. Whereas for some reason, sitting in front of a laptop with Zoom in front of me, I'm just zapped out of energy by the end of 1 to 2 meetings in Zoom. And I think that's one of the challenges in a remote working environment too. So as somebody who scores as number 1 in communication in Clifton Strengths, which is Maryna, what are some of the things that you feel is the balance between not having 1,000 Zoom meetings and still being able to communicate frequently in a way that is efficient? That's still, I think, a problem that we're still trying to solve for, because it's pretty difficult. You kind of have to design a communication map almost as a remote team.
I think before going into any informal modes of communication, team building, right? Talking about formal, the more I talk to people, the more I understand that what de-energizes people is meetings that lack purpose. And the purpose of meeting always should be actionable conclusion. So one thing is just we cannot be always deciding we should be doing. And if we keep deciding to the point that call ends and we are still incapable of doing, it is extreme energy drain. Sometimes it's necessary because things are big, but then they should be also strictly scheduled as a set of calls that still will end up with us doing. But if we are acting like this about small items, if we are not arriving to actionable conclusions about items that can be executed in 2 days, then everybody would be energized, pissed at calls and things like that. If calls have purpose, people show up. That's it. And we need to structure them very well. And if we structure them very well, we know when it's the problem with people, because I always believe that there are issues with compliance. Like we talked about C players or B players. I still don't know what B player is. But we talked about it. Some people do not show the process just because, right? You designed it perfectly well. They're just not up for it. That's it. But you will never know if you have bad call design, bad agenda, bad infrastructure. You will always think, is it me or them? Make it sure that you can evaluate people in the fair way. And fair way is we eliminated as much as we could obstacles for them, and now we see how they perform really. And the same applies to any types of calls. If calls are related to feedback, we need to be clear. Are we talking like and shouting out who we appreciate? Amazing call to have. But we should not mix like, I appreciate this person, but this, you suck. Make it separate. Messages that are about evaluation should be separate. Messages that are like coaching someone should be separate. People should stay focused. And that genuinely helps. And if people are focused, we also have less calls and spend more time on execution regardless. But we will have calls with people, oh, fuck, now I know what I need to be doing, and they just energized by that, by the purpose that it brings to them.
Yeah.
So for me, that is the balance, right? We still need to have longer formats because otherwise people will chat on Slack forever.
Yeah, exactly.
We need to have longer formats, but we need to have longer formats as something that brings people purpose. So we use short formats only for like informal bonding, like even like networking. In a company, people network, right? Juniors want to connect with seniors, understand everybody. So nice to have Slack for that. Nice to have Slack for informal communication. Nice to have Slack even to like have support from your team members that says this sucks, and they'll say yes, and they will validate each other's feelings. It's like nice to have for informal, for rapid, for like kind of urgent things. But we need to have calls to give people like purpose and actionable conclusions. We have, say, monthly or 4 to 5 weeks long product backlog, so meetings that set for this, I call it midterm planning. So we want to test some bigger things by doing lots of small stuff. But then we plan also weekly with a Scrum, and we have weekly creative execution, and we have weekly testing phases, right? So we have Scrums that runs weekly. So that is basically how technically we are allowing things to happen.
Yeah.
And we have like the best person, shout out the best person, Nicholas, hi. Who is
Nicholas Perez.
Yeah, who is the brilliant Scrum Master.
Brilliant.
Because obviously a big part of Scrum is to have Scrum Masters, to have person that teaches people. And yeah, when we like, you say also for you are not natural. And I'm like, oh, sometimes people don't show up just because. That's Nicholas' job to coach people. And it seems to be so simple sometimes for me. Why you cannot like come for call prepared? But it ties into such deep psychological elements of people's like a human experience. And sometimes some other aspects of design of the process affect the other part of the process so unpredictably that we need person to investigate. And Nicholas is doing brilliant work at coaching people and at making sure that they show up for the processes. You need the support for people to show up for the processes. That's to even the best ones.
I mean, I think the one thing that I learned over the 4-year arc is that not one person has the answer that is going to be the needle move that is going to achieve the scale.
Yes.
Like, I've made all the mistakes. And one of those mistakes was assuming that I, as the head strategist at one point inside Sugatan, or David as when he was the head strategist for key accounts, had the answer that would achieve scale. And the reality is that you have every single discipline and every single person inside each discipline has an idea to contribute to round out the actual final idea. And Agile allows for that space for everybody to speak on their ideas that is perfect for a landscape that it requires you to innovate at a fast, as much of a fast speed as much as possible to keep up with all the changes that are both internal inside your organization and external that you can't control. And while I remember talking to somebody who was an HR recruiter, and she was a consultant, and she said flat organizations never work. She said this. And we are a flat organization in terms of there is very little hierarchy, you know, inside Sugatan. And that really is because, and that's really why Maryna and Matas, coming from starting out in junior positions when they first started in Sugatan, are now spearheading teams and managing multi-million-dollar accounts, is because I inherently believe that there are valuable ideas that exist within anybody who we describe as an A player that might start out as a junior, and that's the management style of something as simple as the creative strategist comes to the manager and complains about the media buyer, and then the manager goes to the media buyer and says, why are you not listening to the creative strategist? And then the ad buyer says, because I know it's not going to work, and then the manager then manages the creative strategist. You know, that's not going to actually be effective because this manager doesn't really know the answer. The ad buyer and the creative strategist have to sort of talk to each other and battle it out in a way, and fight well is what I call it now. And then the Scrum Master, you know, which is Nicholas, brilliant coach and Scrum Master, is the one who kind of just takes a step back and only comes in when he sees that there's an impediment in order for them to actually execute on those ideas. That's, I mean, small iterations like that, I think make the biggest impact. And we've made so many mistakes inside Sugatan to come to that real world experiential solution, I think, that right now is working better than me coming in and telling everybody what to do and how to do it.
Yes, and I think there is utility in leadership, right?
100%.
And first is like teaching, but the one that I wanted to mention is authority. Is like the leadership is about use of power. And I think that the way we use leadership in Sugatan, on the scale of Scrum level events, is that we will implement authority to reinforce that this problem between two people should be resolved.
Yeah.
But we trust in a team to find solutions, a lot of that.
Correct.
And I think this ignorance to solutions is specifically humbling experience for most of the people.
Yeah.
Because and I think that is what unlocks true leadership generally. Because if you accept ignorance of solutions, you get the vaccine against micromanagement. So how would you micromanage people if you understand that they are different experts and pillars of knowledge that you don't have at the level they do, and you trust them because they showed up? And how would you micromanage these people?
Yeah.
It will not even come to one's mind unless they are themselves C players, right?
Yeah, yeah.
To manage people that showed up, continuously brought lots of value, and they know what you don't. And that is specifically what Agile really helps with, is because you observe, for example, video graphics directors, they observe performance of the strategists, of how strategists do their work, and they show up to support, and they show up sometimes to have reinforce authority, or to be able to support co-creation and things like that. They are supportive partner, their mentor. They are not coming and telling their strategists what to do every step on the way, which allows strategists to move faster.
Yeah.
And make their own decisions faster, and learn things that they don't, creative strategists, and start understanding media buying aspects, start understanding how to read the results and be held accountable against the results and act upon them. And this allows them, the fact that they learn it allows them to move faster. And that is the leadership in Sugatan, which I think it is hierarchy, but it's very blurred hierarchy.
Correct.
So we still have aspect of authority, but we use it as like this very scarce resource that we apply only when entirely needed.
Yeah.
Aside from that is a source rather of
Support.
mentorship, support, evaluation maybe,
Evaluation,
but not of like pressing authority of what one should be doing.
yeah. Thank you, Maryna.
Yeah.
Brilliant. So I appreciate it. That wraps it up for that. Now I'm going to go into the fifth pillar, which is what we call business design, which is like if you have a better name for it, let us know. But like right now it's just business design. What the heck does that mean?
So mostly everything that we have been discussing here comes from our perspective as a part, because we're a partner that partners up with the founder who have developed the product and build the brand or business, right? But this specific topic is more about the other 50% that's not in our control, that's directly in founder's control. And it is all about optimizing your business numbers, again, to minimize your risks and to maximize your returns, right? So the main metrics that we have in business structure is your COGS, SG&A, your marketing investment or costs, and your EBITDA target, right? Whatever that is. Now, if we make a quick step back and remember that again, we're coming into this bear market into these uncertain times, right? And we also acknowledge the fact that over the past few years at least, the investment pool that was put into e-commerce businesses in particular has been enormous, right? So more and more in our competition, we can see funded companies, right? And I mean, they have their war chests, they have their funding for the, bear market times, right? Which basically means that they can afford, maybe to pay a higher acquisition cost, or maybe they don't need to show any profit for another 2 years, like depending on their, whatever their strategy is. What it does for all of the not funded companies is increases the risks of finding yourself in a place where the buying intent might be going down, but at the same time the costs will still keep increasing because those funded companies are still pushing the auction cap higher because they can afford it, and that's their plan, and they can burn the money, right? So now you find yourself in a complicated situation where only because of that you can run out of business, unless you have viral ads, like a lot of viral ads. But since it's not that easy to get a constant stream of viral ads, many businesses will face risks. Now, the whole purpose of optimizing your COGS, SG&A, and cutting down on EBITDA is so you could afford to operate on a lower total ROAS KPI than your competitor, right? What it basically means is that if we both have the same product and we're selling the same thing, right? And I need X2 total ROAS, but you need X3 total ROAS because, for example, my SG&A is trimmed on 10 or 15 or whatever percent. This simply means that I can outbid you directly in the auction because both of us we're gonna fight for the same customer, right? And let's say you can pay $50 per acquisition, I can pay 100. So simply by just that, I'll win over you because I can pay more, I can bid more, and I'll be higher in the auction than you, right?
Yeah.
Now, the only way for you to be able to operate at a lower total ROAS KPI than your competition, I mean, it's EBITDA is simple, right? All of you founders, you have a choice between do you want to have a lower profitability but scale faster, or do you need a higher profitability but scale slower? So in times like this, the smart choice of course would be to trim down on EBITDA, so if average we say it's 10 to 20%, so in down economy it should be not not higher than 10%, to save as much room as possible for your marketing investment, right? So let's imagine this, you have 100% of total revenue, 10% is going to be your EBITDA, right? You have another 90% left. Average COGS percentage that we're seeing, healthy COGS percentage that we're seeing is going to be around 25%, right?
Let's do 20%.
Yeah. So 10 plus 20, you have 30. Still 70% left. The third component is going to be your SG&A, right? So SG&A, service, general administration costs, so all of your fees, all of your,
subscriptions,
salaries, like all of the costs outside of your COGS.
Equipment.
Yeah.
Travel costs, whatever.
Let's say it's going to be another 20%.
Yeah.
So what I see nowadays as a good, well-optimized business design is when your EBITDA plus COGS plus SG&A fits under 50% of your total revenue. Because it means another 50% is purely your marketing investment, which means you need to exclude total loss. You want to make sure that from all perspectives you can, again, reduce your risks, maximize your rewards, right? So I do want to say that this particular thing is like the top tier priority of things, right? Because if your business design and your balance between EBITDA, COGS, and SG&A is going to be off, then you're already set to fail sooner or later, or you will find yourself in a place where you hit your ceiling and you cannot scale past some point because either way the cost of advertising, they're never gonna shrink. So at some point you'll just find yourself in a place where your numbers don't match because it's still a formula, it's still like all of this is still numbers play, like a lot of this is numbers play, so you need to make sure that you optimize your numbers to set yourself for success, basically.
Yeah.
And
it's important because a lot of founders come to us without knowing their numbers. Well, it's not because you don't know your numbers. I think that, again, this is such a customized, Sugatan specific way of understanding, or it's such a Sugatan specific thing, this thing called business design, which is based on percentages rather than actual numerical value, right? It's based on a 100%. What percentage is your COGS? What percentage is your SG&A? What percentage is your target EBITDA? What percentage is any liability that you may have on your books, i.e. loans? And then on top of that, then that's what's left is your percentage for advertising or marketing spend. And, I don't know if this is actually normal for big businesses. I don't think so. But in the way that we scale and advertise businesses, this is how we approach things to get to a total ROAS, and it is a bit of a struggle for us to reinforce that we're scaling with a total ROAS KPI. And I feel like a lot of founders, they don't really, at least the ones that we've worked with, I would say about 4 out of 5 at a time, don't really understand this part, and it's quite a struggle for us to really explain and convey that we're protecting your EBIT margins. Again, this is our ROI positive scaling framework, right? So we're doing two things simultaneously. We're scaling you and we're protecting your EBIT margin simultaneously for the sole purpose of driving up the value of your business upon exit. And like a lot of founders don't really understand that. I think a lot of founders, they could just hear from their friends, oh, you can make money doing e-commerce. Look at, I made 100,000 this month, and people just hear the 100,000 and they're just like, yeah, I'm gonna get into that, And then like you gotta actually fucking do business. You know, you gotta actually run the business as a business. And so by the time they come to us, they just hear that we scale them from 100K to whatever, a million. And they're like, yeah, just scale us. And we're like, all right, so what's your SG&A? What's your EBIT? What's your COGS? And they're like,
What's that?
I don't know, you know? And it's like, all right, well, you know, let's educate you because, you know, you got to get this total ROAS. What's the target EBIT? And they're like, 25%. It's like, okay, that's an arbitrary ass number. Then we have to educate you. It's like, well, the lower your EBIT, the more that you can actually scale the brand. And there's a lot of education that kind of comes in inside the e-commerce realm because a lot of people fall into it because they just want to quit their normal day job or whatever it is that they're doing because they're just hearing that in e-commerce you can make a lot of money, right? There's a whole bunch of YouTube videos out there. There's like drop shipping, you know, that's kind of like how you started. You know, there's a lot of us started that way, but the reality of the freaking like landscape is that you have to run it as a business. And this is business design. You have to get savvy in designing the business in a way that it positions it to be ROI positive so that you don't find yourself in a place where you're like, well, I don't know my numbers. Oh shit, I'm not actually making any profit, you know, and then you go out of business. So
very common myth that I see out there is that there is a section of founders that are like, why would I want to decrease my total ROAS KPI and decrease my EBITDA percentage? Like, does this mean that you guys just want to spend more
does that mean
of my money?
That's the worst
right?
part is when they come, they just think that we're just trying to like get the retainer.
Yeah.
You know, and it's like
and you know, the answer is very simple, right? Because in all of these cases, it's not. I mean, as you scale, your dollar value is going to be higher than your percentage value, right? Your EBITDA's dollar value. So let's say example one, you get 100K revenue, right? 20% EBITDA, so your EBITDA is 20K. Example B, you get 500K revenue, your EBITDA is 10%,
correct.
but that's now 50K.
Yeah, exactly.
Right, so your EBITDA's dollar value is going to be higher as you scale with a lower percentage, right? And you will enable your business to scale at a faster rate because, again, you can pay a higher acquisition cost than your competitor, which means you will outbid your competitor in any auction. And Facebook ads and TikTok ads and all of the ads, it's an auction and it's bidding and we fight against each other. And if I can pay more than you, I win.
But it's not only that. The third thing about that is that you drive the value of your business's fucking stock value up.
Correct.
So you're doing that simultaneously, right? And so I've only met one founder out of all the founders that we've worked with that actually wanted to hold their company and be the LVMH, which owns Louis Vuitton and all of the luxury brands, meaning they want to create a legacy brand. Everybody else, at some point, you want to exit, you know? And so in addition, you're also increasing the value of the stock of your business, positioning it to exit at a higher valuation. And that's really what we want to drive home, because I think that there are a lot of traps, or at least nobody goes to business school really, and also the things that were working before in traditional marketing and the way that businesses have been scaling, it's just, we're in a very innovative time period, and you have to, I think it's good to redraw the map, or at least question the status quo that existed prior, which for me is a little like difficult. And I can't pretend like I went to business school, you know, and I know all the terminology. I mean, Sugatan in general was built off of scrappy underdogs, including myself. So kind of inserting ourselves into a business world that already has a way of operating in a status quo I don't know what that is, but I do know that it's the time to re-question whether what principles in business kind of stood before, especially now that we're in a down economy. There are ways to have ROI positive scaling. And there are those advertisers and marketers and brand advocates that will have an issue with the way that we do things because it's not brand first. And I don't think we've ever claimed to be a creative studio that essentially works with creative directors. We work directly with founders who are here to de-risk and drive profitable scale and actually leverage an opportunity that they're seeing in order to empower their own lives. And that's really who we advocate for, not the, we're not super organized, we're not huge or anything like that. We're about mastering scale, really.
And enjoying the process.
And learning what it takes to do that, and for us to learn more about ourselves and other people in the world in leveraging those opportunities. That's really what I feel is sort of the underlying tones of why Sugatan exists. I made a decision to create the closest to what is an industry report, especially that we are coming into some unprecedented times inside e-commerce right now. And the industry report is an ROI positive scaling framework. I'm still working on the title, but that describes it pretty effectively in terms of what this report actually entails. And it is not meant to be a final paper. It is meant to be a dynamically evolving report that transparently tells everybody in our world and in our community what we're testing, high-level concepts in 3 different areas, which is inside budget management, that's Matas's world, that includes ad spend, that includes attribution, that includes analyzing buying intent in the markets. My world, which is creative strategy, which is the overarching messaging, video, graphics, advertorials, and then in Maryna's world, which is agile processes, which is essentially containing the chaos innovation within social media advertising and marketing for e-commerce, how to reduce friction, people management principles, which are all extremely critical to the quality of execution in any of these things that we're trying to accomplish. And, we want to break it down to what we're testing, what has potential after testing, and then what's actually proven 3 times. And that's really what the industry report is going to provide. This is the beginning of us introducing these concepts to you guys by really, my whole mission is to deliver as much and to really empower people, coming from a place that's, really leveraging the current innovative times that we're in right now and how to maximize the opportunity.
Stop that.